Welcome to Milestone 1. Milestone 1 is great because we will actually post business transactions directly to T accounts without using a journal. These are the transactions that we'll use for Milestone 1. So they're the transactions for Eagle Inc., and they're for the month of July. Now, to help facilitate this, we have an Excel spreadsheet that puts together everything for us in Milestone 1. So we have all of the T accounts set, all of the dates set. We've got our accounts that we'll be using. Everything is set up. The only thing that we need to do, label the accounts and properly post the transactions to the T accounts. And oh, by the way, you want to make sure you put your name also on the spreadsheet. So you want to have your name on the spreadsheet, and I don't know if I mentioned, it is a self-grading spreadsheet, so it will grade itself as we move along. So as you see in the yellow, these are our T accounts. This is where we'll post and label our transactions. And on the left side, we've got the actual account names and the corresponding numbers. So for example, you've got the number 1 for cash, that corresponds with the T account number 1 for cash. Same thing with accounts receivable. And we want to make sure to name these. And I recommend doing that first, makes things easier. We got inventory, supplies. What was the other one? Number 5, fixed assets. So we got fixed assets. And the great thing about this is that it lets us know if we're correct. We can keep going if not, and working on finding the correct answer. So as you see here, we've labeled 6 of the T accounts so far, got everything correct. So our 7th T account is utilities. And then we've got rent, and then accounts payable, and then notes payable. And then we have common stock. And we have common stock. And then we've got service revenue. Once we enter these, we have all of our transactions. And it says that they're all correct. As you notice up here, our score has gone up to match that as well. So let's work 4 of the business transactions and actually post them to our T accounts. So let's look at this. On July 1st, Mark Johnson invested $60,000 to open Eagle Inc., and the business issues common stock. So let's go back here. So we know on July 1st, the business received $60,000, so we're going to debit cash. We got to find our common stock because the cash was given in exchange for a common stock of $60,000. We got that correct. Great. So now we go to July 2nd, Eagle Inc. pays $3,000 in rent. So we're going to go to our cash account again. We'll find July 2nd. We'll post $3,000 as a credit to the cash account, and we're going to debit rent expense for $3,000. Wow, we got it correct. We're on a roll. So now on July 3rd, Eagle Inc. purchases $8,000 of inventory and pays cash. So again, on July 3rd, there's another cash outflow of $8,000. We've got an increase of inventory. So we're going to debit inventory for $8,000. So we've got that posted correctly. Now, last but not least, on July 5th, Eagle Inc. purchases heavy equipment for $21,000 with a bank note. So let's go here. Heavy equipment, that's fixed assets. So that's increasing. So we're going to debit fixed assets $21,000, and then we took out a bank note. So that's going to increase by $21,000 as well with a credit. And we've got those correct. Wow, we're on a roll. So those are 4 transactions that we've worked. You'll continue to add to these. and go throughout the rest of the month of July for Eagle